the cost of funds went up, so the margins came down to 3.15%.
Margin compression, everybody
They are
knew.
saying that it will
Hang Seng Index doing very well. The Taiwanese market's also 1.5% in the green.
Look at the 3% year-over-year headline number. That's down 67%.
The inflation number has been a bit of a scare at 4.8%.
Generative AI and LLMs, they're fairly high-cost investment.
For the senior employees, there will be no increments this year.
The Nifty bank is off the blocks in style. Remember, the last couple of trading sessions, it's been losing its way.
Hiring one or two very niche sectors or segments, the whole market as such is doing very well.
Incremental repricing of deposits is obviously a cost factor.
It is 28% on the full value, on this, not the GGR, but the full or the face value.
The Nifty is climbing to all-time high levels and sustaining there.
Well and proper in a Goldilocks scenario, which perhaps explains the all-time highs on the Nifty as well.
Bangalore is doing extremely well. Hyderabad is another market which is very potential.
A record high is what we saw on the Nifty today at that 19,520 mark.
Well, that was the day so far. Hello and welcome to Closing Bell. I'm Nigel D'Souza, and joining me is Surabhi Upadhyay as well as Reema Tendulkar. Well, good afternoon, ladies. Any feel afraid of heights?
No, but I know that some midcaps have started, I think, showing that fear of heights.
Even Nifty now.
Yes, I think even the Nifty is afraid of
Perhaps.
heights. And the level that it's afraid of is 19,500. I say this because, in the last 6 trading sessions, 5 out of 6, we have gone to 19,500.
Yeah.
And everyone's thumping the table, this is it. Now we're on our way to 20,000 odd. But if you just pull up a plate, you'll just see that we hit that level. And then, in fact, we come off that level.
Yeah.
And right now, we're close to 95 points away from that particular, from the highs of the day itself. The important part is today, it's weekly expiry. So the Nifty will be in focus and the Nifty will be doing its thing. 19,450 put, that is one of the most active strikes that we're looking at. And the premium out there has come down to around 15 rupees. Just a short while back, it was close to around 30 rupees, 25 to around 30 rupees odd. So we went down to 19,430 and we bounced off that mark. So if you're looking for a stop loss for today, well, 19,425 odd, that should be a crucial support zone. If we break that, we could easily fall 50 points from there. So you pull up the intraday chart of the Nifty, you'll see we went to around those levels. And in the last 3-4 minutes, we have recovered yet again. So keep an eye out there. Let's see whether or not the bulls have one more punch up that we can go ahead and conquer that 19,500. But conclusion, I think, is the Nifty is afraid of heights.
And then 19,500 level, right? But there's clear, palpable nervousness in the broader markets right now. Pull up the Nifty midcap index, that's down close to about 0.7%. Pull up the small cap index, pull up the Nifty next 50 index. Across the board, in the last 1 hour, you've seen a significant sell-off. They're trying to find their feet in the last few minutes, but it's a deep cut. The advanced decline ratio, we started trade well in favor of the gaining side with more stocks advancing as markets straight away opened up at fresh record high levels. The Sensex scaled at 66,000 mark, but now the gap between the two, the lines crisscrossed at about 1145, and since then they have only widened, and we're currently almost at 2 stocks in the red for one in the green. The big picture is that IT is still holding fort. So the Nifty IT index, pull that up for you on the screen. The Nifty IT index still has a gain of close to about 1.8%. It was up 2.5%. It's now still up 1.8%. So that's the bull fighting right now. And on the bearish side, PSU banks, they've had a fantastic run, but now you are seeing them selling off.
Absolutely. No, I completely am with Nigel on this one, because both of us were expecting this to be a good start, and we got that. So I would classify this as really disappointing, Nigel. Yeah. Not only have we been slipping from this 19,500 mark, as you pointed out, 5-6 sessions in a row, we've been sort of slipping from it. But today the market had everything going for it. The momentum in the first 1-2 hours was absolutely strong. Global markets powering through. By the way, they're still powering through. Pull up Hong Kong just to give you a sense of the close, how strong some of the Asian markets have closed out. We're talking gains of over 2% in some of the regional markets. Europe is holding up quite well now, thanks to the subdued inflation print in the US. That's the Hong Kong close, 2.5% higher. So global markets are fine. IT is not even falling. IT is actually supporting the market. Now imagine if TCS was down 2-3% and HCL Tech and Infosys, if these stocks had fallen off on the back of Q1 numbers, imagine then the Nifty is plight. So despite support from global markets, despite support from IT, we've still got this weakness. It's been quite sudden, and therefore it really cannot be ignored. The weakness is largely in the FMCG side of the market. Most of your frontline FMCG stocks are kind of struggling right now, whether it's a Nestle, Tata Consumer. Many of these names are on the downside. Auto is seeing profit taking, and that is kind of understandable because of the run up. And some of the power names, Power Grid, actually Coal India, which is very related to the power space, that's down. NTPC is down. These are some of the larger names in the market that are lower. Just want to pull up the PSU, not just the PSU, actually, let's call it mid-cap banks. Our team will pull up that list. It all started from there. There was a very uncanny fall in these tier 2 banks. Federal's numbers came out. Federal Bank itself is down about 4%. And then this happened. This is a slide. If you see intraday charts, all of them look very similar. Same time, all of these tier 2 banking stocks started selling off, and that's Federal, which is seeing a lot of pressure right now.
Well, that's right. I think pre-positioning has become so important. HCL Tech, Rima told us the numbers are disappointing. You slice or dice it. Anyway, it was disappointing, and maybe the guidance as well is very unrealistic.
And there are EPS cuts.
Imagine that. And the stock is as flat as can be. A short while back, it was higher. So pre-positioning is very, very important. The stock went into these results down close to 7-8% odd. It has valuation support. To its good luck, even the Nasdaq was higher if it has any kind of roll out there. So positioning, I think, is important. The worrying part is on the banks, there's a consensus buy. And hopefully we don't get disappointments out there. In the next few days, we'll be getting HDFC Bank. So let's see how this goes. For the time being, let's find out what are the strategies for the final hour of trade. Mitesh Thakkar is back with us. Mitesh, how are you reading today's market action? It appears the Nifty is afraid of heights, for the time being at least.
That's right, Nigel. I think, given the fact that repeated attempts to stay above 19,500 appear to be failing, it's a slight cause of worry. Now, actually, in the entire picture, what was, I think, missing was the participation of the Bank Nifty. We got a high of around 45,600 plus on the Bank Nifty. And today, I was hoping, and, if you look at the intraday charts, since then, the Bank Nifty has been making lower highs and lower lows. And today, I think, the idea was to clear the earlier high so that it will make a higher high, and which was at about 45,110.12. And we got a high of around 45,085. So I think we still haven't seen the Bank Nifty kind of participate with any kind of strength. And while the PSU banks have fallen, they don't constitute a big enough part of the Bank Nifty. I would want to see some participation coming from Axis, IndusInd Bank, Kotak Bank, HDFC Bank, etc. I think till that happens, I think, every breakout on the Nifty is, we take it with a pinch of salt, because clearly the banking index still constitutes about 38 to 40% on the Nifty. So till that also join hands on the upside, we're always, worried that this breakout may not succeed. For the timing, I think I have a slightly deeper reversal point on the Nifty. I think 19,385 is the level to watch out. Till that is holding, I think things should be okay. But if we see the Nifty start declining below that, then I think some kind of a profit booking led correction could start, and we could see another 150-200 points being shaved off. So we're trading with more of stock-specific biases till the Bank Nifty joined hands. We had some position on the Nifty, but they've been stopped out for the intraday on an intraday basis. So now trading with stock-specific ideas. I have a buy on ICICI Bank and a sell on Havels. ICICI Bank, if you look at the movement, I think it's slightly on the positive side, despite the Bank Nifty not doing good. And the intraday charts are now slightly showing signs of a possible up. Recommend buying here with a stop at 942 for targets of 990. And on Havells, I think there's some kind of a negative crossover signals which we got on the intraday and the daily chart. So recommend selling here with a stop at 1290 for targets of 1225.
Okay, Mitesh, do stay on. We want to chat a bit about banks because the sell-off in banks seemed to have started once Federal Bank reported their numbers. Now, Federal Bank's numbers were largely in line, so you guess that there is some profit taking after a very solid run. The only miss, maybe if you had to find, is on the net interest margins. NIMs for Federal Bank came down from 3.31% to 3.15%. So it's a sharp 16 basis points correction on a quarter-on-quarter basis, and that is slightly more than what the street was anticipating. That said, the management has guided that from Q2, that's the next quarter, NIMs will improve, and he's put out a figure of 7 to 8 basis points quarter-on-quarter improvement in NIMs in Q2. Listen in to what the management, Mr. Shyam Srinivasan, had to say on the road ahead.
We see a 7-8 basis point improvement in NIMs in the Q2, and then from there we will see how the mix of the business plays out and business momentum. But yes, we are seeing the pickup visible. For the year, we had guided we'll grow in the high teens, 18 to 20. We started well with 20% growth in Q1. At this point in time, I believe that should sustain in the financial year 24 and maybe the early part of financial 24. We are looking to do a cap raise. But I have to be honest, there's nothing that we have planned out and I can say it's happening tomorrow or day after. But yeah, we are working through that process. We've met many prospective investors who have expressed interest. We've made some guidances. I'm happy that we've delivered on or better than our guidance, and we believe that that should continue. So I think the interest should be there, and we are hopeful that in the course of the weeks, months, we should be in a process to complete the capital raise.
Okay, on track to complete the capital raise that the bank has planned. Let's get some opinion on this. Deven Choksi of KR Choksi is with us on the show. Deven, any faults that you could find with Federal Bank's numbers which could result in the stock down 4.5% right now?
All right.
Okay, we'll just reconnect with Deven. Federal Bank is down close to about 4.5%, but a whole host of other banks too are weak in trade.
Yeah. I think just to make a point till we get Deven in to join in the conversation, I think the broad consensus in any case has been that we will see a little bit of a margin compression as we get into this earnings season. So that wasn't a new sort of anomaly.
But it depends on how much, right? Like I was seeing one estimate, and they were anticipating that for Federal Bank, the NIM contraction will be 6 basis points. What has come out is 16 basis points. So it also depends on the extent of the NIM compression.
And all of this, depends on what Nigel said, positioning. When you go into earnings, 15, 16% higher when stocks have rallied, then obviously, and you're going in at a 19,500 market, therefore perhaps some profit taking.
Just since we spoke about that positioning, give and take all the fundamental reasons, we talked about the PSU banking index earlier, right, when we started off the show, and that has seen the biggest fall. So, my director is going to pull up the intraday chart out there. And you're wondering what's going on there. But the more important part is she'll also pull up the intraday chart and she'll pull up a month-to-date chart.
Exactly, a
month-to-date, the PSU, now it's down 2.5%, is looking awful. But even after that sort of a fall, it was up close to around 8%.
Yeah, so that's the monthly gain, exactly.
Positioning, and now it's still up 5.5% even after this kind of fall. So this positioning is quite important out there. Look at that. Brilliant.
Exactly.
That's our director on top of her game. Well, Deven is back with us. Deven, Rima was just asking you about Federal Bank's numbers. The street seems to be a little bit spooked on that front. How did you read those numbers? There was some margin compression, slippages that are around 490 crores odd, and maybe the fundraising plan as well will be seen in the next few months.
Yeah, I guess. Hi, Nigel. Well, on one side, I think if you look at the year-over-year growth, I think it's definitely convincing. But more importantly, on a sequential basis, it's a muted growth to little smaller fall into this particular quarter compared to the last quarter. Though strictly not comparable between two, but I would think that here the market is expecting that if the PSU banks included, I think if they are be given higher amount of rating hereafter, then probably I think the earnings sustainability will have to be seen. The corporate peer banks, corporate peers in the banking space, I think they are relatively growing at a smarter pace. And I think also with the different verticals growing in a systematic manner, be it corporate vertical or retail vertical, or even for that matter, housing finance vertical in some cases, I think they are growing smarter compared to, I think, the other in smaller space bank side. So from that perspective, I believe that the market wants to stick to some of the large banks, and that's where I guess I think the profit booking also could be justified in some of the PSU banks, including I think some of the smaller banks which we are talking about.
Okay, that's the call on PSU banks for now. Let's move to another interesting story. Today we saw a lot of volatility in the Prestige Estates stock. The Prestige Estates came out with the quarterly update, and those numbers look quite good, about a 30% growth in pre-sales. Look at the way the stock has moved. It's gone all over the place today. And the reason is that there was initially a reaction coming in on a report, a newspaper report that seemed to suggest that a new entrant in the Mumbai real estate market is now coming under the scanner of intelligence agencies. No names were taken, but the market got a little worried because obviously Prestige is one of the big Bangalore boys that's made a dominant entry into Mumbai. So we caught up with the company to understand, if there's any issue, any regulatory hurdles they're facing with respect to their Mumbai plans. And Chairman and Managing Director Irfan Razak, in this exclusive conversation, clarified that the South Mumbai land, which they have bought recently, was from Edelweiss ARC. And all the fundings, all the approvals, everything is in place. So listen in to the management there, and then we'll talk about the stock.
If Prestige Group has bought this plot of land, has bought it from Edelweiss ARC. This particular plot of land, which was reported yesterday where the business happened, it was in the pipeline for almost a year, and that transaction got concluded almost 4 to 5 months ago. Registration happened sometime in April of this year. Pipeline for this financial year of almost 27,000 crores. And all this will be positive cash flows, which will come. Of course, all the money doesn't come upfront. It does come by installments, and everything doesn't get sold overnight. That will be a 4,000 crore revenue potential fully. And after all, of course, everything won't get sold. It's a high-priced, high ticket size product also. But it will again change the skyline of Mumbai.
Okay, that's Mr. Razak sounding as confident as ever. Devi and I, good afternoon. I don't know if this company is under your coverage, but just give us a general sense. Obviously, Prestige is a big player. They have big plans for Mumbai. The numbers, at least in their Bangalore market, have been looking very strong. What would your thoughts be and your advice be over here?
So I think for the first time, they are entering into this particular market. And obviously, I think the per square feet realization would be significantly higher compared to what they have been up till now achieving from the markets like Bangalore, Hyderabad, or even for that matter, Kerala markets. I think vis-a-vis that, Mumbai market is expected to generate significantly higher amount of realization. And that's where an interesting journey begins. Frankly, premium real estate market of Mumbai is basically now becoming, I think, the prime spot for most of the developers who are looking into it. And that's where I think one is likely to see higher amount of growth contribution coming into the balance sheet of the company. If I heard the commentary right of the management, I think they're talking about ultimately 4,000 crore worth of addition into the top line eventually from this property. So it's going to be significant. I think overall the real estate space remains convincing. The growth is remaining convincing, and I think the selling is also happening. If the interest rate is not moving up, then in my viewpoint, I think the real estate market should remain buoyant going forward. At least we have 3 years to 5 years of visibility in most of the companies' cases on different projects that they are executing, and they have revealed at this point of time.
Okay, all right, Deven, stay with us. Deven, before we slip into that short break, just want to pull up two stocks. JSW Energy, the stock went up one way. Well, now, in fact, it's down close to around 5.5%. It's the top loser that we're seeing on the Nifty 500. So just keep an eye out on JSW Energy. The stock is under pressure. And on the flip side, you have Tejas Networks. Well, that stock, in fact, it's in a world of its own. It's moving from strength to strength. I think the intraday gain that we're seeing of close to around 14%, that's the biggest one-day gain we have seen since in the last 4 years or so. So individual stocks are doing a thing of their own. JSW Energy coming for some profit taking. Tejas Networks flying away as we speak. Time for that mandatory break. We'll come back. We'll get chatting with our Alpha Manager of the day, Rupesh Patel of Nippon, on the other side. Stay with us.
Welcome back. Pull up the Nifty chart. You know, when we started the show at 2:30, we said that the Nifty's seen a big fall in the last 1 hour, but then it was trying to stabilize, it was trying to bounce back. But now again, it's seen a second round of selling pressure, in the last few minutes. And the Nifty's gone down to levels of 19,428. I think you said 19,425 as the key pivotal level.
So we're hovering around those levels itself. I just want to point that out as well. And we visited these levels, just before the show, and we bounced 30-40 points up. So it seems the bulls are trying to put in a fight out here, but this is a very, very important level, 19,425. We don't want to trade below that level for a longer duration. Otherwise, we could easily see a 40-50 point downtick because of expiry-related factors.
Okay, well, that level's gone. 19,420 now. So that pivotal level of 19,425 has been breached, and the Nifty is now selling off just 36 points, and that's what's holding up in the green line. The midcap index is now approaching a 1% fall in individual names. The big stocks which have seen a down move in the last 1 hour: Ultratech Cement, Reliance Industries. It's seen a 4.5% rally over the last 3 trading sessions, but today there is profit booking. Hero MotoCorp is getting hit. Tata Motors is under pressure. It's actually pretty across the board. State Bank of India, L&T, these are all stocks which are now at the day's low. Another stock, not in the large cap space, but in the mid cap space that we're looking at is Shyam Metallics, because sources are telling us that it's likely to launch a 900 crore rupee QIP next month. Yash joins in with the details. Yash.
Well, that's correct, Rima. So the company that we're talking about is Shyam Metallics, and what we've been given to understand is that the promoters of the company are looking to sell approximately or dilute approximately 13% of the stake belonging to them in the company through a combination of both a QIP issue as well as an offer for sale. What we've been given to understand is that the promoters at this point of time hold about 88% stake in the company. Now, to comply with the minimum public shareholding norms of SEBI, they need to dilute about 13% stake, and the work towards that has already started. We've been given to understand that the bankers have already been appointed for this particular stake sale. This is expected to happen, which means a 13% stake sale is expected to happen in 2 tranches. In the first tranche, the promoters would be looking to launch a QIP issue that could happen as early as next month, whereby about 6 to 8% stake could be sold. And since it's a QIP issue, which means about 800 to 900 crore through this particular issue is expected to come into the company. Now, once that tranche has been executed, what we've been given to understand is that for the next tranche, which is the balance stake, the promoters could be looking at another QIP issue or an offer for sale issue. Of course, if it's a QIP issue, more money comes into the company. If it's offer for sale, then the promoters take that money. But in these 2 tranches is what we are expecting that the stake dilution from the promoters would happen. We've written to the company on this particular development, and what the company's reply to CNBC TV 18 is that they've not yet finalized the modalities of promoter stake dilution. Any talk about company's QIP issue or OFS is purely speculative at this point.
All right, thanks a lot for that, Yash. By the way, before we go to Deven to ask him about Shyam Metallics, take a look at the markets. I said 40 points, 25 of those 40 points have already happened. Once that level, the 19,425 level has broken, we have already down 2020.
19,400. Sorry, I'm coming over there just because the pace of the fall, Nigel. I mean, look at what's going on the screen. Everything has changed in the last 1.5 hours. The fierceness with which the market is falling, typically we don't talk like that, but there is some serious momentum on the way down now. I mean, even as you're speaking, you were saying 19,425, Nigel was talking 19,420, and 19,400 gone in a matter of seconds.
That's right, but it's expiry related factor as well, and after the kind of run that we have seen, par for the course, so we went up one way, some kind of profit taking, I guess, that was due. So let's see, and some part of this will be expiry related as well. But I was just talking about those 40-50 points we could fall if we broke that support. We are down closer on 30-35 points as we speak. So let's see how this goes, because in the next 5 minutes, things could pick up yet again, because it'll be the 3 p.m. move. Deven, Yash just brought us an exclusive on Shyam Metallics. Any view on the stock? The promoter entity needs to bring down their holding. They could be looking at raising some money. How would you view this stock? I recall they came at the best time of the metal cycle, and it got subscribed multiple times. But from the top, it's come off. Your take?
Nigel, I think since we don't have the complete coverage on this company, I think I would just refrain from giving the full picture. But what I believe is that I think natural course of dilution to make the minimum public shareholding criteria norm, I think the company is possibly, I think, doing the right thing by way of, I think, creating the dual structure of OFS as well as FREF. I think both of these put together could possibly, I think, result into better amount of realization of money, particularly in the books of the company. I do not know how much component it would be, but higher the amount of component coming into the books of the company, then probably I think it would be a meaningful kind of a dilution that we would like to see. But having said that, I think we would like to wait for it till the time the clarity comes.
Okay. Well, let's see if we can even manage a positive close. It's that kind of an afternoon. Nifty was barely up 7-8 points. Now it's trying to recover a little more and trying to recover above 19,400. Devin, before we let you go, just a view on the overall market. Is there anything that you can attribute today's fall to, the sudden change in mood in the last hour and a half? Any reasons that come to mind? I was checking the bond yields. They seem to be okay. No other triggers. Global markets are holding up. So just running this past you as well.
The two main transactions which are happening in the market. One is, I think, Reliance is basically, I think, demerging the Jio Financial Services, and the cutoff date is coming on 19th of this month. And HDFC Bank combined, I think, is now coming up into the market separately. So to a certain extent, I think the price adjustment is happening as I see it. Nothing that is changing fundamentally for either of these two companies. They remain pretty strong proposition. But maybe due to the technical positions held in the books of the traders in the market, I think some amount of holding is likely to get shifted. And as a result of it, I think the pressure might come onto other stock as a collateral impact, I think, which is coming onto it. But that's about it. I think I don't think that anything has fundamentally changed. This is more of a technical in nature, and maybe I think gets adjusted over a period of time in the market.
Okay, got that. That's the market. Let's focus on the one stock that's actually falling the most on the Nifty pack today, and that is Power Grid. We've got Vivek joining in to explain why. Vivek, I think some negative brokerage commentary. What's happening here?
Well, absolutely right. A very interesting note from BofA Securities today morning. They've gone ahead and downgraded the stock on some fears that they believe that the company that enjoys a healthy, return on equity going forward, that could come under pressure. So what they've done is downgraded the stock to an underperform. They had a buy rating earlier. Target has been kept at 259 rupees a stock. What they're saying is that, they've attributed three reasons that they believe could cause pressure as far as the ROEs are concerned. Number one, they've gone ahead and done comprehensive, channel checks with the Power Ministry as well as various regulators, and they believe that regulated ROEs that the companies enjoy, which are at high levels, going forward could come down quite significantly, as the government believes that there is no more any need to incentivize investments into the power sector, into the distribution sector specifically. And also what the government believes is that at this point of time, there is significant scope to actually go ahead and reduce the scope of ROEs that these companies enjoy. Now, the second thing that they're saying is that the company which is participating, in the low ROE TBCB projects or the transmission-based competitive bidding projects, that could also hurt the ROEs. And lastly, what they're saying is that, Power Grid is trying to enter into new business ventures. That too could go ahead and, hamper the ROEs to a certain extent. Along with that, when you're talking about valuations at 1.9 times, 2-year forward price to book at this point of time leaves very little room for error, and which is why the downgrade has come and has seen a significant selling pressure in today's trading session.
Okay, thank you very much for that. 3.5% down on Power Grid. Let's talk about the market setup and where we are headed. Rupesh Patel, Senior Fund Manager, Equity Investments at Nippon, is now with us. Rupesh, afternoon, and thanks so much for joining in. Wanted to get your thoughts in on IT first. In the two funds that you manage, one of them is the midcap fund, and you also manage the India Tax Saver Fund. I see that you have holdings in IT, but you've gravitated towards an Infosys and Persistent. So just broadly, if you could explain that despite a weak showing in the current quarter by TCS and HCL Tech, and we've got EPS downgrades, what explains the up move that we're seeing right now? What is, what's the buy side talking about, the long only funds, hedge funds, what are they saying?
So thank you so much for having me on the show. So no doubt IT, very difficult to comment on a single day's move. But if we look at results which have been reported, and though early days in the season, but very clearly we are seeing that there is slowdown in terms of demand across verticals, across geographies, and to some extent it was expected as well. Now, going ahead, we believe that this slowdown because of the macro uncertainty, and we have heard it in management commentaries as well, that it's very difficult to have a very bullish view on growth coming there. So if we look at last 6-8 months or almost close to a year, we have seen that earnings estimates have been consistently revised downwards, and some of the froth which was there in valuations, that has also corrected. So as of now, if you look at our portfolios, we are underweight information technology sector per se, and our exposure is restricted to one or two large names in one fund, or in case of mid-cap fund, where the approach is more bottom-up. There are exposures, but they are more based on the growth prospects for individual companies. But in terms of sectoral stance, we have underweight, and we continue to maintain our underweight position as of now. Going ahead, I believe that, at certain point when we believe that valuations would start looking reasonable, and that's when we would consider reducing our underweight on the sector.
All right. Hi, Rupesh. Good afternoon. Thanks so much for joining in. Rupesh, I was looking through your holdings, and I wanted to ask you about the real estate space. The verdict out there is split. One says we're maybe at the start, year 2 of the big run that we like to see in real estate after almost 10 years of no movement. What's your view on it? And I notice, I think you have Prestige Estates as well. And suddenly we're having some adverse news that came in there. The management came on CNBC TV 18. They clarified, no, there's no such news. So how will you position yourself? Will you looking at adding on some of these counters?
So again, difficult to comment on individual names, but as far as the view on sector is concerned, as you rightly pointed out, this is a sector which has gone nowhere in last 10-12 years or so. During this period, thanks to some of the developments like RERA, GST, we have seen consolidation happening, and a lot of weaker players are actually out of the market. NBFC crisis also played a role to some extent in accelerating consolidation in the sector. Today, where we are, very clearly, we have seen that in last few quarters, demand has picked up. Inventory levels across most of micro markets have come down, and we have seen some price uptick also happening. Going ahead, we believe, I think it's an interesting sector to be in, but I always believe that real estate is a very micro market driven sector, wherein dynamics can vary significantly from a micro market, or from a city to another city. Hence, you have to look a very bottom up view on some of these names. So yeah, continue to maintain constructive view on the sector.
Okay, got that. Rupen, hi, good afternoon. Just want to get your sense on banks, lenders basically, and what you would still be comfortable buying right now. NBFCs, private sector banks, PSU banks, where do you think the best opportunities lie?
In our portfolios, we have exposure to banks, NBFCs. Within that, we have exposure to private sector banks as well as select public sector banks as well. We believe, as far as banking sector is concerned, no doubt in very near term, it is expected that there will be some pressure on margins, because eventually the cost of deposits will catch up with the increase in interest rates which we have seen, and we may not see corresponding increase in lending rates, thereby margins coming under some kind of pressure. But we believe that it's still manageable for most of these large banks, because they have a pretty good retail franchisee. And if we talk about growth, despite this margin compression which is expected, most of the banks are expected to report a strong growth in their NII. Credit costs continue to remain benign, and valuations in overall context of the market, they continue to remain reasonable. So we have a view that banks are in our portfolio, they are are overweight, and they will continue to remain overweight as of now. On NBFCs, we have seen a big move happening in last few months. No doubt some of the expectations over there in terms of going ahead with interest costs coming down, maybe their cost of funds should improve and thereby margins expanding. But we believe that risk reward after this run up is not as attractive as it was probably a couple of months back.
Rupesh, in the FMCG pack, I see that you have HUL in one of your funds. Now, ITC has outperformed HUL by quite a margin in the recent past. What have you made of ITC versus HUL, and how do you see both these two progressing over the next 12 to 18 months?
So again, difficult to make a call on individual stocks, but in our portfolio, we are underweight on staples because very clearly the demand headwinds which were there on account of slowdown, both in rural as well as urban markets owing to higher inflation. I mean, that continues to remain there. We should see some respite on the margin side with commodity prices correcting. I mean, some of the benefits should be visible in certain categories. Whereas again, it cannot be said across the board because there are certain categories like milk prices haven't yet come off. But net, I think with the inflation coming down, we should see some support on the margin side. But we believe that staples are not, likely to be in high growth trajectory. So we have some weight, some exposure to these names, but it's more to balance out overall portfolio.
All right, Rupesh, final question before we let you go. As we were having this chat itself, there were some more order wins from the defense space that came about. You have some exposure out there. What's your view from here on? I think you all would have added these stocks a little bit earlier, and some of them have gone blasted. To put it simply, the defense stocks have been on the offense. But how much of the good news is already in the price?
That's a good question and right observation that we were a bit early on some of these names, and that has worked wonders for our portfolios. And very clearly, it's driven by significant uptick in their order book. So visibility in order book, driving visibility in earnings growth, and the valuations to begin with were very, very cheap. And that has been the prime reason these stocks have delivered so well. We, as of now, continue to hold on to our position. Going ahead, the important thing to watch out for would be conversion of these order books into revenue. So the execution needs to be watched out for. And we also need to watch out on what happens to the balance sheets because as these orders will come into execution, we will see some expansion in balance sheets as well. So working capital, to what extent it expands, that's another thing which we'll have to watch out for going ahead.
Okay, got that, Rupen. We will leave it on that note for this afternoon. Thank you very much for joining in. Pleasure having you on the show today. Time for a quick break. As always, we come back and get you some trading calls for the final hour as the market continues to grind lower.
Welcome back. Well, we went down to around 19,385 odd, and from there we've seen some bit of bounce. So maybe on a closing basis, we'll try to hold on to this 19,400 mark. The mid-cap index, though, there's a lot of pain out there. Now the number of stocks advancing is sub that 1,000 odd mark. Mitesh Thakkar is back with us. Mitesh, you have some fresh picks for us?
We're just kind of hanging on to the 19,385 level, which I was watching. And, I think, but to me, I think, while this may be expiry-related kind of movement, but in case we start breaking from 19,385 tomorrow also, I think the risk of or the chance of testing 19,200 remains pretty strong. So I think that factor needs to be kept in mind. If it goes below 19,385, 380, I would want to be slightly aggressive in cutting down my long exposure. On the stock side, I have one buy and one sell. I would recommend taking some profits off and or, even attempting a STBT call on this banking. Sorry, just a minute. Give me a second. I think there's some problem with my software. Just if I can come back to you in a minute or so.
Yeah, right. We'll come back to you, Mitesh, once you get that sorted out. For the time being, just let's alert our viewers. We're talking about the markets at the low point of the day, but a couple of these new age themes are doing very, very well. So Zomato, it's come off a little bit from the top, but it's still up close to around 4.5% odd. You have now it's back up to 6%, so it's being bought on every kind of dip. And PB Fintech, just a few days ago, the management joined us. They are talking about turning PAT positive this year. They're saying that yes, in the next 3 years, their PAT will be 1,000 crores. And the EBITDA, adjusted EBITDA, which was a loss of around 120 crores, they're talking about a swing of more than 250 crores odd. So it will turn from a negative 120 crores to a positive 150 crores approximately. So, the commentary was good. And in 2 or 3 sessions, PB Fintech from around 700 rupees is at around 770 rupees. But on the flip side, Nazara Tech, well, only 5% of their business will get affected because of this change in the GST, the 28% odd. But, this is the third straight session that the stock is under some pressure. And in fact, it's down close to around 9% odd. And it's at a 1 month low actually. The last 1 month, it's at a 1 month low on that one. Mitesh, have you managed to sort that out? Could we come to you?
Yes, please. So I have a STBT on Balrampur Chini with a stop at about levels of 380, and I would look at a target of around 365 over here. While a BTST on Bharat Forge with a stop at about 850 for targets of 866.
Okay. Mitesh, do hold on. We just want to quickly apprise our viewers about Wipro. Wipro is likely to report their numbers around 4:30. There is a press conference scheduled at 4:45. And the key to track from Wipro this time will be on growth and the guidance for Q2. Now, the company is expected to report a performance weaker than peers. Constant currency revenue growth is likely to decline 2 to 2.2%. Remember, the company had given us a guidance that in Q1, revenues will fall -1 to -3%. So the company had prepared you that revenue will fall this time. But the question is how much? Consensus is that revenues will fall by about 2.5%, closer to the bottom end. Margins will also see a bit of a contraction compared to what we had in the prior quarter. The key will be the September quarter guidance. There are some who believe that it will be a 0 to 2% kind of growth, and there are some who believe that it will be a -1 to -3% growth. So basically, in the September quarter, if the street is to be believed in expectations, it will be the third consecutive quarter of a negative growth. So that's something that the street will track. Consensus expectation is that Wipro is actually going to see no growth this time, because if anyway you're going to be growing negatively in the first half of the year, and even if things pick up, you're probably going to end the year on the flatter side. So pull up the Nomura estimate for FY24, and you would see that while the street is expecting the rest of the IT companies, the TCSs, Infosys, to at least see a mid-single digit kind of growth, for Wipro, they're expecting absolutely no growth in FY24. So that's a bit concerning. On the flip side, valuations are on the relatively reasonable. And plus, there was a buyback that the company had announced some time back. So that's, in a way, been supporting this stock.
Okay, that's Wipro for you. I will watch out for those numbers. By the way, you really have to, salute the IT biggies today, because they single-handedly are trying to pull this market back from the lowest levels of the day and also back from nearly slipping into red territory. The IT index, it's actually held up rock solid when you least expected it to do that.
You know,
in fact, even now, I mean, Tech Mahindra, some of these other names, Infosys 2.5%. So you're continuing to see some buying there.
You know, X of the numbers, one factor that everyone's been talking about is that if truly we are at the end of the US Fed, hiking cycle, right, then this is going to provide some cap on the valuation downside. You remember the big PED rating took place in IT companies as US interest rates started going up and the cost of capital started going up. That was one of the big reasons for the PED rating that has been seen in IT companies. But now if you're closer to the bottom end and the US CPI, inflation print out of the US, so then I think the street is taking a call that perhaps that the US interest rate perhaps has peaked out, and that will be positive for the valuations of IT companies. So stripped of the fundamentals, this is another big sentiment indicator that the street is talking about, which explains partly the up move, the buoyancy in the IT stocks.
I'll give you another data point. The Nifty is up 35 points, and both your stocks, the stocks that you track, Infosys as well as TCS, both of them are heavier weights on the Nifty. If it wasn't for them, we would be back at the low point of the day. They're contributing 51 points on the upside, while the Nifty, in fact, is up 35 points. So stripped of Infosys and TCS, we would be down closer around 15 points. Infosys and TCS holding strong. Who would have thought?
And ICICI Bank also. ICICI Bank and HDFC Bank are the other two pillars of support.
It reminds me of that game of cricket when you have an out-of-form batsman and you least expect that person to come in and everyone's kind of, beating him out, beating him down, and then he comes in and plays a winning knock. I'm not going to say Virat Kohli over here, but, just general, that's exactly what IT has done today,
The question is also sustainability, right?
Yeah,
if this up move has not been backed by fundamentals, because most people have come out with a very bearish note on IT, then can it continue to run?
Well, anyway, for now, I think it's a good idea that this has happened. But we also have to talk about two stocks, which were the newsmakers of yesterday. And I'm talking about both Nazara and Delta. Let's pull up the stocks first, and then we'll get to the news points. Delta is down 5%, and Nazara is down another 3.5%. So what this perhaps is linked with is a very, very important clarification that the Revenue Secretary gave CNBC TV18 yesterday itself on this issue of 28% GST on online gaming as well as casinos. So Revenue Secretary Sanjay Malhotra actually has said that 28% tax on the full face value for online gaming has already been in place. So there's no question of levying it in a retrospective fashion. He also goes on to clarify that the government, in fact, will go and challenge the Karnataka High Court order, which the government lost in the online GST case. They will take that case up in the apex court in the next 1 month itself. Take a look.
You said that the 18% GST on the gross gaming revenue, which is in effect at this point in time, is the interpretation of online gaming companies. Are we to understand then that these changes will apply retrospectively? So the 28% on full value will apply retrospectively?
That's why I said, that the rate has always been, to our mind, to our understanding and interpretation, also held, by our ASG, is that it is 28% on the full value, on this, not the GGR, but the full or the face value, as some people call it. And so it's basically a clarification. And so this is
a very important clarification.
And so it is already having effect as of date, and so there is no question of a retrospectivity because it's already 28% on the face value, and we continue to charge that prospectively. This doubt no longer remains. That's the only difference.
Welcome back. Well, there has been a pullback of sorts, so it seems that at least a close above 19,400 should be possible for what it's worth. Sudeep Bandyopadhyay is with us on the final leg of the show. Sudeep, always a pleasure having you on. First up, let's talk about the fall that we've seen in banks today. It was a particularly severe one across the board in mid-cap banks, BOB, Central Bank, J&K Bank, Bank of Maharashtra. What did you make of it? And would you look at buying anything in Tier 2 banking?
Good afternoon, Surabhi. I think what correction or profit booking we are seeing today is par for the course. We have seen the market run up quite a bit, and whenever market is reaching another all-time high or reaching some record levels, there is always a little bit of nervousness and some amount of profit booking. Also today being the expiry day, some amount of position shifting is happening. As far as specifically the banking space is concerned, I think some amount of adjustment we will see over the next few weeks, whereby money will move into HDFC Bank from some other names. And this is bound to happen with HDFC now merging with HDFC Bank and the allocations changing, and a lot of adjustments will happen. Money will move. Money will also move to Reliance on a different note because the value unlocking story is becoming real there. So this is getting played out now. I don't think there is any worry by and large about the fundamentals of the market or the structure of the market. I think the bias continues to remain positive. I would be surprised if at some point of time, again, we start seeing market trying to move towards a new high tomorrow. You have to take these days when there is some correction, some profit booking. As far as mid-cap banks are concerned, I did see the results of Federal Bank. Yes, the results were not as per expectations. The GNPA and NPA going up is a matter of a bit of a concern. But if somebody is an aggressive investor, I think the bank is doing a lot of right things. They have a stable management. So maybe this is a good time to buy into Federal Bank, taking the opportunity of this correction. I also like South Indian Bank, and that can be looked at current levels too.
Okay, all right. Hi, Sudeep. Good afternoon. Taking your view on the banking names. By the way, the Patanjali OFS, it's the issue is fully subscribed as of now. There was an OFS that was in the works that was slowly getting subscribed, and I can see an update coming in that the Patanjali OFS is fully subscribed. Sudeep, I wanted to ask you about InfoEdge, Naukri. It's the third straight day that the stock is higher. We're talking about mid caps, broader markets being under pressure. That one's making a 52-week high, so it's moved very, very well. And volumes are nearly around 90% higher than what we have seen on an average for the last 20 days. How would you view this stock?
Well, Nigel, I think one thing is happening as far as this entire, the recruitment space. The InfoEdge, in other words, basically most of their income is out of Naukri, used to depend on IT hiring. And we have seen the slowdown in IT hiring in the recent past, and that really made them focus on other verticals as well, which are much more margin accretive. And we have seen, as far as InfoEdge is concerned, we have seen in Team Lease and other places as well, which are specialized in this area. The pickup of non-IT services, non-IT hiring has led to margin expansion. And also this focus into other hiring has, probably is a long-term trend, which will stand them in good stead going ahead. Now with IT also picking up as far as hiring is concerned, because people have started building inventory, building benches. Again, I think good days will be back for this entire hiring space. And we are probably seeing the beginning of that.
Okay, we'll leave it at that. Sudeep, thank you very much for joining in. Coming to the close of what has been a fairly volatile session. It started with a flourish. The Nifty scaled all-time high levels, crossed its previous peak, went on to hit levels of 19,567. The Sensex today scaled the 66,000 mark. But a sudden, cautiousness emerged in the market in the second half of the trading session, and the market sold off. The Nifty went below levels of 19,400 only to bounce back and close slightly above it. On the whole, the benchmark indices, both the Nifty and the Sensex, are managing to close up in the green, but no such luck for the midcap index. The mid-cap index ends with a sharp cut of about 0.7%. The small-cap index was down close to about 0.85%, and the advanced decline ratio in favor of the stocks losing by in a ratio of about 1:2. The only pocket of strength today was perhaps the IT pack. So the Nifty IT index was up close to about 2%, with heavies like TCS, Infosys, Tech Mahindra, Wipro, even HCL Tech, which was a big miss on all parameters, managing to close up in the green. So that was one big support area for the markets.
Well, IT really held out. I'm just going to talk about some of the broader market trends because overall it's been a day of profit taking in the mid-cap arena. And we've been talking about mid-cap banks selling off. That was really the highlight today. So whether you're looking at a Bank of Baroda or a Federal Bank, by the way, is ending with a drop of about 5.5%. So you can argue that the numbers aren't, there's no howler there. Yes, margins have fallen about 15 basis points, but it's not like, everything is kind of, collapsed. But anyway, the market was in a different kind of mood today. PNB, Bank of Maharashtra, J&K Bank, across the board, profit taking on banking stocks. Profit taking continued on Delta Corp, more selling on Delta Corp, 5.5% down. Nazara was down about 3.5%. So these are some of the major areas of the market where things have cooled off. However, there are always the winners as well. Let's not forget that. So Zomato had a phenomenal session today, 7% higher. Some other new age stocks like Delivery, PB Fintech, they've also seen some buying come through. So not all bad in the mid-cap market. And I just want to point out something like Dream Folks, so where they're getting into a tie-up, expanding their network, 5% up on that stock. Tejas Networks, 12% up on Tejas actually. So as usual, some interesting movers and shakers, but I guess, Nigel, overall, it's been a bit of a scare for the market today.
Well, that's right. As we said, right, the Nifty is afraid of heights. The 19,500 remains elusive. The only good news, I think, today was, at least on a closing basis, the rough average would be around 19,425, 19,430, I think so, because we'll have averaging for the last half hour or so. We're grateful for that kind of a close. A bit of a bounce from the day's low. Live to fight another day. Let's see how do we bounce back. And remember, we ended in the green with gain of around 57 points. Let's go to see the big boys, TCS as well as Infosys. Well, on that note, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Our Thursday special, Big Deal, comes up next.
मधील रस कमी होऊ नये म्हणजे मिळवलं